Interest rates have been dominating the headlines in US and Canada. However, most people find this topic quite boring or only relevant to stock market investors. The reality is that interest rates affect us all. In this short video, let's look at the large impact of interest rates on our everyday lives. Please note that this is not a video explaining in depth how interest rates work, which is quite complex. There are actually several other videos on YouTube that you can watch to understand these concepts. This is also a good time to remind you that nothing in this video is financial advice. I'll try my best to make this boring but important topic not too bland. We will look at a bunch of things but end the video by talking about how this all impacts your financial journey. Let's begin. So before we look at how these interest rates affect us, let's quickly look at what these rates are. Central bank interest rates, like those set by the Bank of Canada or the US Federal Reserve, are the rates at which banks borrow money from each other. These rates influence the broader economy by affecting the cost of borrowing and lending. Central banks have to consider various economic factors when setting rates, including inflation, economic growth, employment, and the overall financial stability. If we just look at Canada for a few seconds, since 2021, Canada has experienced significant changes in interest rates. In response to the high inflation, the Bank of Canada raised its policy rate from a historic low of 0.25% in March 2022 to a peak of 5% by July 2023. But as inflation began to cool and economic growth slowed down, the central bank started cutting rates in June 2024. As of September 2024, the policy stands at 4.25% after 3 consecutive 25 basis point cuts. And more recently, US has also started cutting rates. Usually US is the one leading the way for these policies, but this time Bank of Canada was first. Now this is one of those times where being first does not mean anything. It just means that things in Canada were getting a little too difficult. There's also one more thing I want to mention. Central banks often get a lot of hate for what they do. However, I think this time they have done a pretty good job of balancing inflation and economic outcomes. I'm pretty sure a lot of people might disagree with me, but I think so far it's been going okay. Anyway, I'll leave it up to you to decide if you want to really learn the history of these policies and how they came about, but we want to look at how these are affecting our everyday lives. Basically, why should an average person care about interest rates? Let's start with economic impact. Lower rates generally stimulate economic growth by making borrowing cheaper, and higher rates can slow down economic activity to control inflation. We will discuss inflation in a bit, but inflation plays a big role in what decisions the central banks are taking. But overall, what you need to understand is that these rates affect business investments and consumer spending habits quite a lot. So this point about economic impact is not something that we can discuss standalone. It's actually a combination of all the other things that we will discuss in this video. But generally speaking, if things have gotten easier or harder for a business or an individual like you, interest rates may have played a role in that. If you're watching this video in 2024, you have really felt the impact of these rates over the last 18 months. If we look at the current state of Canada's economy, it's growing at a subdued pace with real GDP growth expected to be 1.1% in 2024. The Bank of Canada actually set out to slow down economic growth, and they have done a great job at it. In the short term, we are really not feeling great about it, but in the long term, only time will tell if it's good or bad. I've already mentioned inflation once, so let's look at it as the next point. Interest rates are a key tool for managing inflation. Lower rates can potentially lead to higher inflation as money circulates, and on the other hand, higher rates help curb inflation by reducing spending and investment. Basically, this might be the concept that we are all very familiar with. As interest rates go higher, inflation comes down, and as interest rates go lower, inflation slowly goes back up. It's a very careful balance that central banks have to maintain. If we look at the current situation in Canada, while inflation has slowed to 2% by August 2024, consumers remain cautious about spending due to lingering concerns about price stability. So what are we exactly waiting to see? Has inflation actually cooled down, or it might make a comeback because the interest rates have now been cut? A simple way I keep a track of this is to actually keep an eye on my grocery spend. If I suddenly see the prices going back again, that means that inflation might be coming back again. And of course, this impacts our everyday lives quite a bit because we all have to buy groceries and other things like gas as well. But one more thing that we really need to talk about when it comes to these interest rates are actually mortgages. This is again one of those things that has a big impact on so many people. You might have heard from your friends already how much they are suffering because their mortgage rates have gone up. In fact, the mortgage payments for a lot of my friends has gone up so much that it has completely messed up their finances, and you'll see similar stories posted online everywhere. So what's going on exactly? Basically, these interest rates also follow the central bank interest rate hikes. Lower rates can basically make home ownership more affordable and easier for you to buy a house. This basically has made it very hard for people to buy a house in the last 2 years. Also, this has greatly affected monthly payments for those with variable rate mortgages. If we look at the current state in Canada, rates have started to decline with the 5-year fixed rate already pricing in future Bank of Canada cuts. There's also a slight uptick in home buying intentions, especially among those who are coming new to Canada as mortgage rates have become more favorable. So if you're somebody who has been priced out of the market for a very long time just due to the interest rates, now might be a good time to start looking at what you could possibly buy as interest rates have been coming down. So if you look at high interest rates from a personal standpoint, it might seem like all doom and gloom, but there's one thing that can actually benefit from high interest rates, and that's savings. Lower rates means lower returns on savings account and other interest bearing investments. On the other hand, higher rates can benefit savers and those relying on interest income such as from GICs. So this has actually been great for a lot of people. Those who like parking their money in a bank have been enjoying a steady 4 to 5% interest rate over the last 18 months, but now it's slowing down and coming down slowly. You might have already gotten an email from your bank telling you that your interest rate might be dropping soon. This is because the central bank interest rates have also come down. So you see that this impacts your savings rate in quite a big way. A lot of people have also enjoyed pretty good rates on GICs as well. This is basically government bonds that pay a lot when interest rates are higher. And now that the interest rates are coming down, your savings rate will also start going down. So you need to figure out what you really have to do with that money. Do you want to keep it in the bank at a lower interest rate or find alternative investments where you can actually make more money, such as dividend stocks? Talking about investing brings us to the next point and how interest rates affect your investments. Again, this one is something that a lot of people are familiar with. Lower interest rates often lead to higher stock prices as investors seek better returns. This is also because there's more money flowing in the system. This also affects bond yields and valuation of various asset classes in different ways. This is a huge topic in itself, and we can discuss how these rates impact different asset classes over a period of time. Overall, what you need to know is that the portfolio allocation during a low interest rate environment versus a high interest rate environment is quite different. Just to give you one example, during high interest rate environments, people would rather park their money in GICs or bonds over dividend stocks. This is because why would you want to take on more risk by going into dividend stocks when you could steadily enjoy almost risk-free returns? But you have to also remember that the impact of these interest rates can take some time to see in the markets as well. Sometimes it's early, sometimes it's late. So far in Canada, stock markets have shown some volatility but generally responding positively to rate cuts. Next, I want to take a minute to talk about how interest rates impacts consumer debt and credit cards. Again, this is one of those things that impacts us all. We all use credit cards and we all tend to rely on loans at some point. Lower rates can reduce the cost of borrowing on credit cards and personal loans. This can also have an impact on student loans as well. This might affect the burden of existing debt and the attractiveness of new borrowing based on where the rates are. So basically, as these interest rates vary, so do the rates on things like your credit cards, which impact consumer spending. So you might expect that now that the interest rates have come down, consumer spending might be increasing. But wait, not so quick. There's cautious optimism right now. While there are signs of improved consumer sentiment, Canadians are still largely cautious about their spending. This is because consumers like you, me, and everybody else have seen the prices go up so much that we want to calm down for a bit. See if the prices have cooled down and only then start spending our money. Now, I'm not somebody who relies on credit for my everyday expenses, but there are lots of people who actually do. These are people who want to buy a new phone or new clothes. They have not been shopping as much as they would like to. Now what we'll see is this behavior changing as the interest rates have started coming down. But this is something that you should always keep in mind. Your spending habits actually relies a lot on interest rates. You may not even know about it. Another thing that is greatly impacted by interest rates are actually exchange rates of different currencies. I'm not going to spend a lot of time on this, but understand this. Interest rate changes can affect the value of a country's currency. Lower rates may lead to a weaker currency, impacting imports and exports. This can greatly influence international trade competitiveness, which can also impact the economy. But on a personal front, it might impact our international travel plans. Our travel plans might be impacted by how the currency is performing, and this is something we should all keep in mind. For example, let's look at Japan. I'm actually going to Japan next month. One of the reasons why I felt comfortable going to Japan right now is because the Canadian dollar is very strong against the Japanese yen. The Japanese yen has actually been struggling quite a bit because of their very low interest rates over such a long period of time. There's also broader impact of this, and you might have heard about the recent Japanese carry trade. I'm not going to go deep into that in this video. There's plenty of videos out there already talking about this. But when it comes to the Canadian dollar, it has been relatively stable but may face pressure if rate cuts continue. The last two topics I want to talk about are things that greatly impact us. Let's start by looking at the job market. This one's not going to come as a surprise to anyone. Interest rates impacts the job markets quite a lot. Just look at what has happened over the last 2 years. So many people lost their jobs and there are so many fewer jobs in the markets right now. This is something we can all relate to because we have directly seen people struggling and losing their jobs during this high interest rate environment. When it comes to interest rates and the job market, here are three things that you should know. Firstly, lower interest rates, as we saw in 2020 and 2021, can stimulate business growth and hiring increases during those times. So basically, interest rates affect unemployment rates and wage growth directly. And finally, interest rates should play a role when it comes to your career decisions and how secure you want your job to be. This actually often goes overlooked. People take their jobs for granted, but you need to understand the kind of company you are in, how leveraged the company is, and if they can survive a very high interest rate environment. When we were in a low interest rate environment in 2021, people were hiring, overhiring all over the place. When the interest rates went higher, a lot of these companies could not sustain all these employees and had to let go of tens and thousands of people. Now, next time you're looking for the job, make sure you take into account the interest rate and the condition of your company before you take a decision. This is not something a lot of people consider when deciding which job to join. However, I truly believe that this should be a part of your equation when you're trying to decide which company to join and during what times. The last thing I want to talk about is actually personal wealth planning, such as your overall retirement and investing plan. We have already touched upon saving and investing a little bit in this video. However, you need to understand that interest rates play a key role when it comes to your financial planning and wealth building. Interest rate changes actually affect pension funds and retirement savings. Whether or not it impacts you depends on your age, but you should remember that rates play a key role in this. Rates could also impact the amount people need to save for retirement. And overall, this can also influence decisions about when to retire and how to manage your retirement income. Just to look at an example, as we enter times of lower interest rates, these times can actually be challenging for retirees relying on fixed income investments. But on the other hand, this may boost stock heavy portfolios. So why am I talking about all of this? This comes back to the same point I had touched upon before. You need to understand where you want to put your money when the interest rates are low or high. Here are a couple of points that I keep in mind. When interest rates are higher, it's actually best to stay away from risky investments. These businesses may need to prove out that they can actually survive hard times. Also, when interest rates are higher, you might want to park more of your money in GICs and high interest savings accounts. This is a great way to park your money until you decide what you want to do with it. As the interest rates have started coming down, you might want to rethink your portfolio. This might be a good time to start entering some of those stocks which may not be struggling anymore because the interest rates have actually started coming down. A very good example of this is actually growth stocks like Tesla. They tend to do much better when the interest rates are lower. They can benefit a lot from lowering interest rates, so keep that in mind when it comes to investing. You might want to start taking on a little more balanced approach and start spreading your portfolio a little bit more now that you're no longer getting high interest on your savings account. Again, this is a very broad topic and I'm not going to continue talking about this in this video. This video has already been quite long. I just wanted to cover a boring topic so you just know how interest rates impacts all of these things. Or more so, what things are actually impacted by interest rates. So yes, those were some of the things I wanted to touch upon in this video. Understanding the wide-ranging impacts of interest rates on your life can be very helpful. Whether you're planning to buy a house, saving for retirement, or figuring out what to do with your portfolio in an ever-changing economic climate. Learning a little bit more about these topics will place you much higher than an average person. On that note, I'll see you next week in a new video. Till then, keep learning and stay on top of your finances. Until next time.